The latest quarterly earnings reports are in, and it looks like big tech might just be back. Following a shaky few quarters for the tech sector, Meta, Google, and Microsoft have all beaten investor expectations, delivering strong growth and seeing their share prices rise. So let's unpack what happened and how a company like Meta, which was pretty much written off by many investors, has made such a comeback. By the way, this is the first investor call breakdown that we've done, so if you enjoy it, be sure to subscribe to the channel and comment which other companies we should discuss in future videos. Let's start with Microsoft, who came out of the gate strong, beating revenue projections by posting a quarterly revenue of $52.86 billion and earnings per share of $2.45. Significantly above the predicted $2.23. That puts Microsoft's revenues up 7% from a year ago and net income up 9%. Now, a lot of this growth comes on the back of Azure, Microsoft's cloud offering, which is now their biggest revenue driver. In fact, the unit recorded revenues of $22.1 billion in the latest quarter, up a staggering 31% year on year. Now, this lands in pretty stark contrast to Microsoft's traditional business, OS sales, with sales of Windows to device manufacturers falling 28% year on year. Now, to be fair, that's not totally surprising, considering that the sales of PCs across the entire market fell by 30%. But it's still an erosion of Microsoft's historic market. And that perhaps explains the company's refocus in recent months. That's because ever since Microsoft's big push towards AI, thanks to their collaboration with OpenAI, the company has been building a lot of hype for the first time in a while. Now, while Microsoft admits that AI capabilities weren't a big revenue driver in the last quarter, they hold a lot of potential in the future. So despite the fact that AI isn't really making any money for Microsoft right now, the hype surrounding the company's AI efforts has undoubtedly boosted investor interest and enthusiasm, which is only a good thing. But they're not the only company playing in the AI space, with Google and Meta both mentioning the topic a lot in their calls too. In fact, Google brought up the topic more than 60 times in their earnings call this week. Like Microsoft, Google's revenue for this quarter also outperformed expectations, with Google and YouTube ad revenue both also outperforming. Now, search is obviously at the core of Google's business, and it saw its quarterly revenue rise by just under 2% year on year to $40.4 billion. That is certainly good news, but it is significantly smaller than the bumps that search experienced in Q1 of 2022 and 2021. This may be unsurprising though. For a while now, forecasts have predicted a major slump in advertising revenue across the market. In fact, that's what led to companies like Google and Meta seeing their stock prices crash in 2022, as investors began to fear that ad-funded models might begin to struggle. In that context then, these results actually look better than expected, with the market expecting ad dollars to dry up and under increased pressure from Microsoft's AI-based new Bing. Even a slight increase in revenue for the search vertical looks pretty impressive. Regardless, to try and combat this threat from ChatGPT and Microsoft, Google placed a lot of focus on AI during their earnings call too. During the call, Google pushed their own AI tool, Bard, as well as emphasizing their plans to continue rolling out AI tools into their existing product suite. Unlike Microsoft, however, they haven't benefited from quite the same excitement boost. Investors and experts are certainly interested in Google's AI projects. The company has a lot of experience in this area after all, but the momentum is certainly more concentrated around Microsoft. That being said, Google are clearly taking the sector very seriously, announcing last week that they're combining their Brain and DeepMind groups into one new combined operation, a decision that Pichai claimed would significantly accelerate our progress in AI. On top of that, in this latest earnings report, they also broke AI costs out of the other bets category, a symbolic move that suggests that AI is not only increasing in significance for the company, but is also expected to soon stand on its own feet. Another division rising in prominence, though, is cloud. Now, Google's cloud offering is significantly smaller than that of Microsoft or Amazon, but this quarter saw the division turning a profit for the first time ever, with revenue growing by 28%, the largest revenue growth for any segment within Google. YouTube also outperformed expectations, but it's worth noting that advertising revenue on the platform is still down from this time last year. Regardless, YouTube's relatively good performance is good news for Google. Like the better-than-expected revenues from search advertising, this suggests that the drop in advertising revenue seen across the industry a few months ago might have been a little more temporary than some feared at the time. And that's not only good news for Google, it's great news for Meta too, whose business relies heavily on advertising rates and revenue. Now, Meta didn't actually announce their earnings until Thursday, but following Google's earnings call and the good news surrounding advertising, Meta's stock preemptively jumped, with investors hoping that Zuckerberg's empire might be faring better than they'd expected. And that broadly seems to be true. Revenue at Meta was up 3% in the last quarter. Daily active users reached 3 billion people across the company's family of apps, and the average revenue per user outperformed expectations too, at $9.62. That last figure in particular suggests that there might be some light at the end of the tunnel for Meta's digital advertising issues. Having crashed Meta's valuation in 2022, it looks like things are beginning to look up in the digital advertising space, with advertising revenue for the company exceeding expectations at $28.1 billion for the quarter. It's not just ad revenue that buoyed investor confidence in Meta, though. The market also seems to be reacting well to Zuckerberg's so-called year of efficiency. Now, this is a trend that we've seen at other big tech companies too, but Meta is taking it more seriously than most, firing tens of thousands of staff members and planning to cut another 10,000 jobs soon. Contrary to what commentators might have expected a few months ago, these mass layoffs haven't signaled weakness to the market. Instead, they seem to be rewarding Meta for doing it, with many investors hoping that this strategic refocusing might be enough to pull Meta out of its current slump. It's not just advertising and layoffs though. Google has also really begun to focus its attention on every business's favorite two letters, AI. In their statement, Zuckerberg repeatedly mentioned the company's plans when it comes to artificial intelligence, especially highlighting how AI tools could help further boost advertising revenue. In fact, Meta seems to be so caught up in the world of AI that Zuckerberg has gone from evangelizing about the future of the metaverse to, well, barely mentioning it. And that might be a good decision too. Merely mentioning AI at the moment seems enough to get some investors drooling, a sentiment which can't easily be transferred to the metaverse. In fact, Reality Labs, Facebook's metaverse division, lost $3.99 billion in the last quarter, even more than was expected. And with those losses only expected to increase over the coming year, distracting attention away from the metaverse investment, at least until they have a clearer strategy for it, might be a good move. And it seems to be something the investors are rewarding. If you enjoyed this video, then be sure to subscribe to the channel and comment below which companies you'd like to see us break down next. And if you're in need of more content right now, then there's loads more to find across the entire TLDR network. You might not already know, but we actually have 5 different TLDR channels explaining the news from the UK, Europe, and the rest of the world, breaking down the latest developments in the business world, and running you through the day's most important news that you might otherwise have missed. And TLDR has been doing this for about 6 years now. So to celebrate our anniversary, we'd love it if you subscribed. Not only to this channel, but also any of the others that interest you too. They're all linked in the description. Anyway, our whole purpose is to make the world around you more understandable, to unpack the confusing parts of the news in a way that's interesting, factual, and entirely non-partisan. So if that's something that you're into, then you have 5 channels to enjoy. And regardless, thank you so much for your support over the last 6 years. It really means a lot.